Hello and welcome to the Mortgage Broker Builder Show, the CEO1440 Show, where we look to maximize your 1,440 minutes every day. We talk about mortgages. We're going to talk a little bit about insurance, growing, scaling, all kinds of things. Got a guest this week that took a mortgage company from 700 plus, was able to exit after the pandemic during the tough times, is now running a very successful insurance business. And his prior company was JFQ Lending. John from Quicken. I know a lot of people know it as a different name, but we'll just leave that as that. We got John Kresevic here. How are you doing?
I'm great, John. Thanks for having me. Excited to get into some stuff today, and obviously trying to give back any way I can to the broker community.
Yeah, I think it's interesting. So you and I met, like, I was kind of like, you were in Arizona, I was in Michigan, but our careers overlapped. You were a name when I was kind of leaving. You were a name of one of those guys that was kind of up and coming in there. You'd hear your name on, Boomski reports and different things. So our paths kind of were similar, just, I was there 15 years ahead of you, but you were definitely a forefront. Like, you were out ahead of the game inside of the broker space. And I think a lot of people, I've heard it a lot of times, well, JJ, went and did this with his brokerage. So I've heard a lot of people. And when I was starting one back, I don't even know if you remember this, it was probably 2018, 2019. I reached out to you and said, you may not really know me that well, but I'm starting a brokerage. What pointers would you give me? And you gave me a couple. One was Accelerate. You said, check these guys out. It works really well. We use it. It'll help you do a lot more business, which was a fantastic CRM. Yep. You told me renegotiate your contracts yearly because you're going to pay way more than you need to today. And the other thing you said is, up until really recently, I was doing all of my QuickBooks and spending, 8 hours on a Saturday in there playing accountant. I hired somebody. My life is way better. Don't do your own books. Those were the 3 pointers that you gave me, 7 years ago, and they've stuck with me. So I appreciate that. But want to just talk today. A lot of what I do, and for anybody that's listening, and it's a fan of JJ's that's hearing about me. So I've been doing this for 28 years. I have a 4-digit NMLS, spent a lot of years inside of Quicken, but I help mortgage bankers, brokers, go ahead and I like to say, I help them get their poop in a group, because everybody that's out there, it doesn't matter who you are, where you're at inside of your game. There's certain things that if you just could identify the problem, pull on the lever, there's a tremendous amount of scale that we each have. But sometimes it takes somebody from the outside looking in to point you in that right direction. So that's what I do. So if you're struggling or you want some help, reach out. I've got free groups, a whole bunch of stuff. But JJ's here today because he has done it. He's out of the mortgage space today, so he can kind of let us in on some of those secrets, maybe that other people won't tell you the secret sauce. So I just want to kind of walk through your career. Like, you started at banking, you graduated from, I think, ASU. Is that correct?
Yeah. I grew up in Cleveland, Ohio. Cavs unfortunately got, 4-1 gentleman sweep last night, which was terrible. I went to ASU, the Harvard of the West, if you haven't been out here. That's what I like to call it. Started at Quicken back in 2008. Little did I know how difficult the market was, my naive sense. I actually went 0 for 96, meaning my first 96 credit reports I didn't write alone. Probably the worst ever, the worst in history. I speak very quickly. I didn't have good training. I was pretty hard-headed. My first loan in my career was actually written by my VP at the time, the founder of the Boomski Report, Tim Berkmeyer. So, I had a date circled on the calendar. I was going to quit. My mom was in my ear. You don't need to do that, Johnny. You can figure this out, right? And so luckily for me, I had a great leader who took the time, invested in me, and actually wrote my first loan to show me what was possible. And that was really the beginnings of my career in the mortgage industry.
So you started at the Big Red Machine. I think a lot of people, they discount how awesome it is inside of there from the training. I never paid for coaching. I didn't have to. I had tons of coaching that I was being paid for just through reduced bips. I was paying for all kinds of coaching all the time, but you didn't realize it until you got out and saw the rest of the world. But you started there, and then you went to a broker for a couple of years after you left Quicken. And tell me about that. Like, what was that transition like?
Yeah, it was crazy going from retail to broker world. I was fortunate in that the gentleman that ran that broker shop was Mensa smart, super intelligent. And so he had figured out, we started dabbling direct mail a little bit, which is actually how I scaled my mortgage company after I left that brokerage. But what he had figured out was, from a system standpoint, really dialing in and trying to, we talk a lot about, you hear a lot in the industry, can you streamline your systems? Does your POS work? How does your CRM work? We talked about Accelerate for a second earlier, right? What he had done is he simplified it. We use old school Calyx Point. And the reason we used old school Calyx Point was it was so fast to put a loan through. So when I started there in 2016, 2017, was really during Brexit. And the key was how quick can you get an application out, because rates really fell through the floor, right? And so he's like, look, we're going to stick with Calyx. And the lesson I learned from him, amongst many others, was you got to reduce friction for any loan officer you have, because if and when rates drop, how quickly you can get documents out and how quickly you can get e-signs out is going to matter. And it's probably more prevalent today with the amount of triggers that are happening and people coming behind with hundreds of dials potentially to consumers. So yeah, I learned a lot there. And the key there was learning that direct mail works, which I would have never thought was a thing. I mean, the fact that people still open their mailbox and respond to mail is just a crazy thought, and it actually worked for us.
Yeah, I think that when you first get out of retail and you land in the broker spot, you kind of have this eye-opening experience. All the things that you were told it wasn't. It's not this. It's not. And you're
Yep.
like, what else haven't I been told? Like there's an aha moment. I think everybody has it because. Right? You just don't know any better, especially being inside of Rocket and Quicken. People, there was a lot of Kool-Aid that was drank there, and people just didn't know that these other things actually exist. So a couple of years into that, you decide to open your own brokerage. What was the catalyst to that? What kind of got you? And I know there's a lot of people to this day. There's a lot of broker shops that have been opened out there with ex-Rocket people, Quicken people that said, well, JJ did it, and we're going to do it too. Like there could be literally hundreds.
Yeah, that's awesome. The catalyst for me was that same owner, while hyper intelligent. Trump gets elected in 2016. If you remember this, rates went up. They went from whatever the number was, 3.25 to 4.5. Nothing crazy like today. We actually stopped all marketing. So for a period of 4 to 6 months, we didn't get a single lead. Now I had been fortunate. I closed something like 85 million the year before and made really good money with a high basis point plan. So I wasn't needing cash, but I just got to the point where I was so bored every day. We were playing euchre. If you're from the Midwest, you know euchre. We're literally playing euchre during the day. We go to the gym for 2 hours. We would go see a movie during the day. Now, mind you, my time at Rocket was 75 hours a week. Love what I did, in the office at 7:30, out at 8 o'clock, dinners 4 nights a week. I didn't like free time. I didn't want to play cards for 2 hours a day. I want to make money, right? I want to support myself, support my family, be busy. And so I just started thinking, this isn't that difficult. If I can spend money on mail, figure out some tech stuff, which I'm not strong at all, realize very early I need to have some complementary pieces around me. I know sales, right? So what we talked for a little bit about what Rocket, the insurance company I'm at, we've built out a 75-page sales Bible, so to speak. Most of that knowledge came from what we were taught 10, 12, 15 years ago. And I could bring up a bunch of trainings. You would know exactly what I'm talking about, right? Like the corner sale, for example, or the digging deep training or gaining agreement training, right? Stuff that we were all trained on. What I realized was, look, I don't want to sit here until rates come down again and be at the mercy of my owner who doesn't want to spend money on marketing. I can go do this myself, right? So started thinking about it, put my house up for sale, was going to sell it. Didn't pay the IRS, my federal taxes. I went exempt for an entire year. That was actually my seed capital for JFQ Lending. I was all in from day one. My wife's like, you're crazy. I'm like, all right, we'll figure this out. And then JFQ started at sometime in August of 17, and we really took off from there.
And you ended up getting to the point, and I know, and watch that growth of, I'd see the numbers you were publishing. And at the time I was at I was with Hall Financial or JG Wentworth, and we were doing Costco business, and right, it was flowing in, and our branch did $1 billion a year, just a little branch here in Michigan, but always saw the numbers you were posting, and you were always out in front, kind of leading from at least a standpoint of a culture of sales matter. You lead with results, those kind of things. Tell me a little bit about the culture inside of JFQ and what you think made it kind of tick. Hey, John here, not trying to sell you anything, coming at you with a bunch of hot commission breath. But what this is an FYI, letting you know that we do have a community where we have shared hundreds of posts, hundreds of sales scripts, techniques, tactics, different things to help you grow your business and maximize your 1,440 minutes every day. I'm not sure if it's for you, but it definitely could be for you. So go in there and check it out. CEO1440.com will take you to a place. You can join our free group, give it a sniff test. If you like it, awesome. We've got a lot of other things. We probably would like to sell you something, but right now, that's our gift to you. Get in there, check it out. CEO1440 will take you to a place where you can sign up to be part of our free group. Enjoy the rest of the show.
One of the things that made it tick is I was really lucky in the fact that I had really great leaders amongst me. I was fortunate in that with my experience at Rocket, there were a few dozen guys I had mentored and groomed the same way I was mentored and groomed when I started my career. And so when JFQ opened up, we were like the cool kid on the street because nobody had really done it before, right? So for the most part, when you're at Rocket, you're in this building and you don't talk to ops. You don't know anything about marketing, operations, technology, compliance, legal, recruiting. You just know sales. And so smart by Rocket, keep all your sales folks where you only know one focus. I totally get that. But it never really been done before because we all thought, like you mentioned earlier, brokers, right? It's a bait and switch. They're going to lie. They can't give you that rate. And when you get in our world of the broker world, like, wait, this is actually real. And so for us, from a culture standpoint, I was lucky in the fact that I had 5, 6, 7, 10 other similarly like-minded sales leaders that all knew and thought most of the same stuff, right? So, we row in the same direction. We would get in. I had a good group of guys. We did a bunch of cool stuff. What was important for me was my leaders had the ability to not only earn really good incomes, but I want to do some really good stuff for them, meaning could I mentor them into running their own companies one day? Could we, we did trips. Like I rented a jet. We took everybody. We went snowmobiling and skiing one weekend, right? Like stuff like that. So from a sales culture aspect, understanding at our core, we have to be better than everybody else at sales. Fundamentally, that's it. And there's 3 things I care about with salespeople. I got to get you paid, I got to get you promoted, and you got to have fun while you do it. And so if you can permeate that from the top down, which includes stuff, flying to Cabo, sending people on contest, the crazy stuff we used to do when the market's really good, but understanding holistically that if I get my people paid, I get them promoted, and they have fun while they do it, what's going to happen? Well, they're going to also want to recruit their other friends, right? And in mortgage, it's an incestuous industry. I also use my marketing budget as my recruiting budget, meaning I wanted to overspend on marketing so my phones rang off the hook. Because what happens if my loan officer's phone rings all the time? Well, Johnny's going to go tell Timmy that works over at Bill's Mortgage Hut or Rocket or Loan Depot or wherever, dude, my phone doesn't stop ringing and I'm making, 50, 60, 70, 80 basis points, whatever the number is. You got to come over here, right? And so I was able to create a mindset amongst my first 30 or 40 folks. Look, we're the Navy SEALs of JFQ. We're going to be the best at what we do. We're going to be the best converters. We're going to have a hell of a lot of fun while we do it. We're going to work really hard, and then we're going to play really hard. And that really just kind of stemmed from there. As the market turned in our favor, we just said, let's go take a shot at this thing and let's push.
Yeah, I like that. You could actually swap out. I like acronyms. You could swap out the fun for play, and it could be your 3 Ps. See that? Triple
That's
Ps.
Good. I'm not a marketing guy. I'm not a marketing guy. That's good.
Yeah, I think that I'm just smart enough to put 3 words together, so that it works. It's genius.
Yeah,
I do think that that's a really great approach. Is to just light yourself on fire and let other people watch you burn is way easier than telling people what you're going to do.
Foxhole leadership.
And this is something that I always was kind of curious about. So you guys did, most of your business was based off of, you were out generating your own leads when everybody was out buying from LendingTree and trying to play the LendingTree, $71 for a VA loan in Arizona. And you guys were mostly FHA streamlined, VA, and put together a better system. And I know that the company that did the mailers, I think is still, there's still a company out there that does mailers that was your company, wasn't it?
Yeah, so it's Monster out of Maryland. Monster is the marketing company. The owner is Ken Bartz. He and I are actually close friends. He's a mentor of mine on a bunch of different stuff right now. And what actually happened was I realized, coming from Quicken, being lucky enough to be in some of the rooms where, not really decisions are made, but hearing why rationale, I knew I could never develop technology to beat Quicken to a LendingTree lead or a lower my bills lead, right? So what we learned early on at Quicken is speed to lead matters. Whoever gets the lead first, most likely is going to convert that lead. And so realizing, look, we're a startup. I can't invest tens of millions of dollars in tech to compete with Quicken or loanDepot. I probably also can't compete with Quicken or loanDepot or any other big spender in SEO or online or digital, right? Because they're just going to outpay me. And I did find this out later, which was pretty funny, is Quicken was actually paying money for the JFQ name. So when people would Google JFQ, Quicken would come up, and it was a fun, humbling moment. But mail is mail, meaning they open it, they either want to call you or they don't, right? So I don't have to be invest in technology. I got to answer the telephone. That's it. Well, it turns out I don't have to be that intelligent to just train a bunch of people to be really good at sales. And then when the phone rings, you answer it. And so what we actually built out and developed was in concert with Ken. He was a tremendous help for us. He gave us the initial playbook of how to convert mail. And they do a lot of their stuff based on data and analytics, which is really interesting. You think of mail, it's literally a postcard, but they use a bunch of data and analytics where they're buying almost every single record possible in the country from CoreLogic, figuring out who's closed where, and then I can say, hey Ken or hey Monster, I want to buy this data, right? And we say, okay, cool, And so it became a formula for me. If I spend X dollars on marketing, I'm gonna get Y phone calls. If I get Y phone calls, my conversion is Z. I know exactly what my revenue is, and so then it became a very scalable formula where it's just a matter of I've got to control the controllables, which is answer the phone and conversion, right? And what it also helped from a mail standpoint, we also knew exactly when the phone was going to ring. It was typically around 12 to 1 o'clock Arizona time on a Monday. And then from there until Wednesday is crazy busy. Thursday is a little bit less busy. Friday is your least busiest. Why that's important, my loan officers could now also plan their weeks. Meaning when you come in on Monday, you've got between 7 and noon where all my back end's got to be finished. I got to handle all my in-process clients, all my suspended loans, clear all my stuff out, make sure lunch is done. Because from 12 to 7 on Monday or from 12 to 6 on Monday, it's go time. I got to try and find my 2 loans to start the week off strong. And then I also knew that my Fridays, I was going to have way less calls coming in, so I could also spend more time on back end on Friday. So it's really creating a plan for your loan officers through pretty much knowing exactly when the phone was going to ring from the mail.
And one of the big things that I see and I think you're going to touch on this and you already probably have, is that a lot of loan officers in today's world are trying to do 1,000 things and they're not doing any of it well. And the people that I see that are actually really doing well, they only have a handful of things, but they just do that handful of things better than anyone else. You mentioned that you had a scaling playbook you've actually picked it up a couple of times. I feel like this has been your baby for the last little bit. It's 75 pages. What kind of like golden nuggets are inside of there?
It's a ton. It's really the all the things we've learned collectively what not to do. And so if I was a broker right now, things that I would focus on, and I'm not really a big follow influencer guys, right? Oh my gosh, I can't think of his name. One of these gurus, and he's all on the social media right now. Whatever. His thing was, look, figure out what you're the best at in life, and then double down on it, and then triple down on it, and quadruple down on it. And I happened to come across that in 2018 or 19. I'm like, you know what? That's us, right? So we're like 80% FHA Streamline. The reason we chose to be FHA Streamline is nobody else wanted to really be in that space. They said, we're going to go VA Earl route. Well, who wants to play in the VA Earl route? Everybody. Why? It's easy. I can lower your rate. I can roll my fees in. Whereas with FHA Streamline, you can't roll costs in. So we actually figured out and developed, we tied into every single county for taxes, meaning I knew when your tax due date was, depending on your county or your state. So I knew how much I had to collect for escrows. We were able to build out a calculator that tied into our pricing engine. So I knew based off of this rate of 5%, the kickback was this, how much of your prepaids we could cover. The biggest issue with FHA Streamlines is you don't know your cash to close up front. So we developed a tool for our loan officers where they could just type in loan size, interest rate, zip code, hit enter, and we could spit out a scenario for them. So they didn't have to think about it, right? And then so part of this playbook became, okay, cool. How do I maximize conversion? So it's scripting, it's your standard objection stuff. Like everybody's going to have that, but it's more philosophical. And from a culture standpoint, I prefer hiring unlicensed folks or people that don't have bad habits. And I want my entire organization thinking and acting the same way for multiple reasons. Number one is going to be quality control. For the most part, I know without a shadow of a doubt what's going to happen on a phone call, no matter who takes that phone call. To me, that's important because then I can train and teach my leaders what they should be listening for, right? So as you scale an organization up, you also have to scale up leaders. Well, if I have 10, it's at one point we probably had 70 sales leaders or 60 sales leaders. I can't have 10 of them think we're going left and 10 of them think we're going right. We got to row in the same direction, right? And so what this playbook becomes is, for every person we bring into the organization, no matter what their experience is, we go through the same training process. That way I know and my leaders know, okay, cool. John Kresevic, you already know A, B, and C because we went through it. So if you tell me you don't now, we've got to recover it with you because we should have an expected outcome. Remember, everything I'm doing is trying to be formulaic. If I spend X dollars on marketing, I'm going to get Y phone calls. If I get Y phone calls, my conversion is Z. I know my exact revenue, and it's just a math equation from there on profitability, right? But what this is from the top down, getting all of your leaders in the organization, or if I'm an individual broker, understanding I got to have a repeatable process. And I think that's one of the best things Quicken instilled upon me was create a repeatable process that you can do over and over and over again so you can take out the outliers. Like, sure, you might have had a really bad phone call and wrote the loan, but you wrote the loan because you would have written it anyway. What we're worried about is what are the loans you only write because you have a repeatable process and you get better and better and better at sales. And you got to make sales fun and make sales a game.
Hey, John here. If you're anything like me, you like to get in, poke around, you like to check things out before you go diving in head deep. We've got a group where you can do that very thing. CEO1440 is a community. We post in there all the time. There's hundreds of different people, a lot of different conversations and things that you may be able to take away and apply into your business. Now, the guarantee, I can't make you any guarantees. It's not going to 5X your business, but what it might do, it could 5X your business, probably will give you some things that you can tangibly take away and start applying in your business every single day. Everything we post may not be for you, but it definitely could be for you. So check it out. The group's free. Would love to see you in there. CEO1440.com. Enjoy the rest of the show. Yeah, it's an area today that COVID wrecked a lot of people in that they were able to get a positive result without being very good. So it gives you a bunch of false positives, right? Maybe it's like Ozempic. I can go and take Ozempic and not work out and lose some weight and feel like I'm pretty fit, but I didn't do it. And I encourage a lot of people when we sit down and we're looking at their business, map their customer's journey from the first breath, like even before you say hello. And you'll see me post stuff online about email signatures. They're like, email signatures don't matter. I'm like, no, your clients don't care. Because if you have a really crappy email signature and that client wants something buttoned up, they just never call you. Because, right, you never hear about them. Of course, my clients don't care if I don't have a website. Exactly. Yours don't. But most of the world that does care about a website, they just never become your clients. I think that that's something that probably all those SOPs probably is what allowed you to sell your company. And when did you, so you sold, and it was like rates were already high. Companies were going under left and right. I know you pivoted hard into doing HELOCs. Somewhere along the way, you figured out some HELOC product to find a way to stay afloat. And tell me just walk me through that a little bit. Like, how did you sell? Was it 2023?
No, we ended up closing in November of 22. So it was about an 8-month process. Okay. We sold to PHM, Prosperity Home Mortgage, which is a subsidiary of Berkshire Hathaway. The match on paper made a lot of sense because PHM is a retail entity with roughly 97% purchase. They didn't do a ton of refi. And we were coming at this, we were basically 97% refi with a Quicken developed leadership team between myself, most of my sales leaders. And so the match made sense of like, look, we got capital, we're Berkshire. Market's not great for anybody right now. And we have an outlet for some of the leads that you guys need because we have all these, PHM is closing between $5.5 and $7 billion a year in volume. And, I don't work there anymore, obviously, but I know the company decently well. My whole team is there. My executive team is all there. But the idea was, look, we close all this purchase business. You guys can come in behind and refi it for us because we're not great at refi. And oh, by the way, we also have, billions of dollars that we do in basically purchase business, but where it's not big enough to sit a loan officer. So PHM's model, we're going to buy our parent company's Home Service of America. We're going to go buy a real estate company in Manassas, Virginia, and we're going to place 3 PHM loan officers in our 3 branches. So when our realtors come up and they say, here's my purchase agreement, they just hand it to a PHM retail loan officer. Well, PHM also has all of these subsidiaries that they've acquired that are too small to sit a loan officer in. And the thought process was, look, we can send you guys, up to $1 billion a year in purchase volume if you can centralize your purchase division here and we can fold that to you, and then you handle our refi. So we got lucky in the fact that it was a good match. The CEO and I, he'd been a mentor of mine for years. We had known each other. He actually is also ex-Rocket. So, we got to know each other. And he's like, look, you guys have a good entity. And we were lucky in the fact that I had a really, really strong executive team with really, really good leaders at the stuff I'm not great at. I don't know operations. I don't know technology. I don't know, compliance. I don't know processing or underwriting, capital markets. But I was able to surround myself with really strong people in those areas. And so I think what it came down to was the familiarity I had with their CEO and he had with me, and then having a team around me that could help come in and do some of the other functions, not do them, but really help that transition was important. And I still probably have 50, 60 folks from JFQ that are still over there. Some of those are loan officers. Most of my executive team has gotten promoted over there internally, which is great to see that they're having success because we had a really good team. That's how JFQ was able to scale. At our height, we were doing, I think our 4th year in business, we did about $4.5 billion in production. We had no outside capital, no private equity, right? No hedge funds. It was all self-growth from our own funds. So it was a pretty wild ride. And then in that exit was, to Berkshire's credit, they didn't change the terms of the deal, even though the market in 22 got worse and worse and worse and worse and worse. And then we closed in November of 22. And so my group is still over there today. We just did about $100 million last month as a branch, which is awesome, between my 2 refi divisions and my purchase division. So they're starting to get some traction, starting to do pretty damn well.
No, and it's the market's picking up. I'm seeing, right, the people that made it through the storm, they're there. The survivors are there, and I see most of them incrementally getting, slightly better month in, month out. Nobody's, leapfrogging. And you mentioned something that's really important. And anybody that's listening to this about thinking about starting, JJ had mentioned surrounded himself with different people. I see this happen a lot. You've got 3 guys that decide they want to start a company. They're 3 guys that had they started in the same training together. They work together. They have the same skill sets. And now they're going to go and you have one guy just split it. Don't partner with somebody that has your exact same skill set. It might end well, but most of the time when I see those relationships, those companies drag for a long time because you've got a great sales guy trying to figure out marketing. You've got a great sales guy trying to figure out compliance. And us sales guys, our egos are so big that we can't say, I'm not smart enough. Like, I did sales because I wasn't smart enough to do the other things. So just, I admit it all the time.
No, you're right.
But I see it happen all the time, and it's really prevalent with the guys leaving from Quicken. You had 3 guys that were team leaders together or RVPs, and now they're all going to go, and they literally share the same skill set, and they spend their first 6 to 8 months just figuring out, whose ego is bigger and who's going to do what. So just word to the wise, don't partner with someone that's a comp to you.
It is the number one thing. And when I talk to folks, because it comes up sometimes, one good thing Quicken also does is they kind of teach you culturally, just share stuff, like be a good person, so when you're inside, if you're a director in Arizona, you share with directors in Michigan or Ohio. It's just how it happens, right? Because Quicken wants if you're doing something really well, you want to share that with everybody else to raise up the organization. So I was able to keep that mindset post Quicken, and there's a lot of folks that give them the same advice. Is like, look, just because you got 2 VPs that both did sales, who's in charge of integrations? I hated that word our first year and a half. I didn't want to do any tech integrations. I was sick of demos, right? And so figuring out who has some of those complementary skill sets, it's going to de-stress your life because you don't have to try and learn something you have no idea. Like, I would never be able to learn integrations or APIs I got to go bring in this person or this gal, and she can do it and he can do it, right? And so we got really, really lucky in who I was able to bring in and recruit. That's another thing. If you have any desires to go scale an organization, you got to recruit. Your role as CEO, besides don't run out of cash, is I got to recruit all day long, 24/7, not just loan officers, but a couple key leaders. Like, once you're getting to 60, 80, 100 million a month in volume, that's a real company, right? And if anybody on here is listening and wants to scale an organization, you got to start thinking early of who are some of these candidates I can try and, target, because it's not a slow process. It can be up to a year-long recruitment, and you got to do the conversations and take the meetings. That'll de-stress a lot of your life if you can bring in some complementary pieces.
Yeah, it's people sometimes are blown away with, that we all overestimate what we can do in the short run, but underestimate what you can build over a year or 2 years. And I think that having those conversations well ahead of where you need to be is, start leaning on people, mentors. So a couple of things, if you were to go out right now today, and we can talk about your insurance business too. We haven't even mentioned that. Let's touch on that for a second here. So you started an insurance business. Tell me a little bit about Turbo Insurance. I know some about it, not a bunch.
Sure.
Insurance is an interesting space. I know about the space. I've gotten it before. So tell me a little bit about what you're doing today. Hey, if you're listening to this, quick reminder, we have a free group, CEO1440.com. Jump in there. Tons of posts, tons of information, a lot of stuff we're bringing day in, day out to help you do more with your 1,440 minutes every single day. CEO1440.com. Check it out.
Yeah, so Turbo, the idea was, at least at JFQ, we had enough volume where I wanted to treat my mortgage company as my flywheel. Meaning I know I'm going to make X amount of revenue per closed loan. Well, where else can I monetize, right? So we launched a title company, we launched an insurance company, we launched a real estate company. Why? Well, if I'm already spending so much money for leads on marketing, I want to try and monetize the rest of the chain. And so that's what got us thinking about the insurance space. Turbo, we're licensed in all 50 states. We've got contracts with 5 of the top 8 brokers in the country, from names you've all heard of, right? Nexa, C2, Barrett, Hall Financial, right? We've got 2 of the 5 largest lenders in the country. I've got 2 of the 4 largest privately held real estate companies in the country, where we're ingesting something close to about 12,000 monthly leads. I basically am building out, and we're building out a call center here where we want to use technology to enhance the insurance process. Because what's happening, and you guys are probably seeing this all day long, California, Texas, Florida, Louisiana, Michigan's weirdly expensive. Deals are dying because of insurance right now. And what's really happening in the insurance space is that with the last 2 years specifically, there have been so many one-off natural disasters. I don't want to get into any of the politics of, is it global warming, is it not? The fact is, we have crazy hurricanes, we've got crazy wildfires, all these different things. Insurance carriers, if you think of like Allstate, State Farm, Progressive, they make money in, say, 44 states, right? Well, these 5, 6, 7 outlier coastal states where you're having a bunch of wildfires in California or hurricanes in the Southeast, they lose a hell of a lot of money there. And so what you're starting to see now is they're pulling out, right? So if you were to Google State Farm pulls out of California, right? Last year, State Farm said, we're done. We're not accepting any new policies in California. Well, so then what happens, it creates a vacuum. Everybody else says, well, hold on a second. If State Farm is going to pull out of California, why should I still be here? And so the insurance carriers, if you remain there, you've got to raise your rates. And so what we're seeing in our industry is anywhere from 10 to 25% year over year increases in insurance, both for home and for auto. Because carriers are basically saying, look, we've got to make up for our losses the last 24 to 36 months from these natural disasters, right? And that's why in your guys' world, the mortgage world, you're probably seeing insurance go up. We have clients in Florida where it's like $9,000, $12,000 a year for HOI, which is crazy to me, right? But our idea is simple here at Turbo. As I said, we're licensed in all 50. We've got these massive partnerships for leads. We're taking in 10 to 12,000 a month, and then we have a carrier panel of about 80 different carriers. You've heard of most of them. Some of them are regional players where we say, look, our loyalty is to the consumer, not the carrier. That's kind of our pitch line, right? So we'll take your information just like a mortgage broker. We're going to shop you to 4 to 7 different carriers and find you the best deal. And on average, we're about 27% cheaper per policy than the national average for insurance. So we come in a little bit cheaper, which is always nice.
Yeah, I've found, and the thing that, if I go back 15 years, and State Farm, wherever, they were all close. Like it was, splitting hairs. It was McDonald's, Burger King, and Happy Meal was X. And today you can go to one and the next one's double the price. And you have deals that are falling out because, the loan officer, we're loan officers. We estimate on the low end, like it's the rose colored glasses, and the DTI then goes, too high, and you're in a pinch where that HOI is actually, it's killing the deal. And being able to have someone, like a Turbo or some place that you can go to that's not just, Bob at Allstate, President Palmer. And you can look across a whole bunch. So, insurance is now becoming a more critical piece, and loan officers that aren't talking about their relationship with insurance, their clients may be paying more than they need to just based on not having a good partner there.
Yeah, we're seeing, and to kind of explain the why, it's just like in mortgage where, let's say you've got Loan Sifter or something for your pricing engine. You can see 5, 6, 7 different carrier lenders. I still get confused, by the way. I call my producers loan officers still. It's still in my head. So it's context switching in my head. But just like there's certain days where one lender chooses to be out of the market, or they're like, look, we're at capacity, rates are down, we got to raise our rates. Insurance carriers do the same thing. So they might say, in the month of April, we're the most competitive in Michigan. Well, in the month of May, they could be $1,000 more expensive a year. If you were to think about this as a loan officer, your own insurance, if you're with one of the large captives, I guarantee you they didn't call you when your policy renewed. They just sent you an auto renewal in the email. They didn't reshop your policy. They just said, hey, John, you pay $2,200 a month. It's going to be $2,500 a month. Call us to discuss. We're going to auto renew you May 1st, right? Whereas what we do is 2 months, and we treat insurance just like a refi when rates are down. What we'll do is we'll say, hey, John, you're actually renewing August 1st. You pay $2,000 a month right now. We already shop this with 5 carriers. We actually can get it down to $1,800. But if you stay with State Farm, it's going to $24. So I have a $600 annual delta. Let me redo your insurance. It saves you $50 a month. And so what we've now created is basically a platform or an atmosphere where we routinely reshop our clients every year, just like you would in the mortgage world if rates were always going down, right? And so we'll know up front what we can do for somebody. And our idea is if our clients think they're insured by Turbo, even though we're a broker, they don't ever talk to somebody else like, oh, Turbo's got my insurance. I might actually make a payment to State Farm or Farmers, for example, but I know that I'm insured by Turbo. And one of the things that we're starting to kick out, we need to do a better job of this on online and socials, is deals we're saving that are, hey, we're at final approval. DTI is at 50.1% because of XYZ. Can you save us on insurance? We can come and swoop at the end and try and knock out 30, 40, $50 a month, which actually can be the difference between a deal closing for you and a deal not closing for you.
Yeah, you should definitely get that social proof out there. And that's what we want to see. People in today's world, we get sold so much crap. I just want the certainty that the person actually selling me the thing can actually do what they say. My inbox is filled up with people that can 10X my business. They don't even know what my business is, but they can 10X it because of some AI thing that they just started doing 4 months ago. And they're a life coach, but have never had a kid. Right? It's amazing.
I love those.
So that's cool. So anybody that has questions about insurance. Now, if I'm just a small little broker shop, 3-4 people, can I partner with Turbo? Will you take my business?
Yeah, 100%. We are receiving leads from somewhere between 80 and 110 different mortgage companies every single month. It's as low as 10 leads a month to as high as, I think our highest is like 1,500. That comes from UWM, right? Like we have a big partnership with UWM. So, John at Turbo Insurance, or you can go to our website, turboinsurance.com. We've got an online, check us out. You can put your own address in, get a quote. Now, we naturally are super conservative with the quote because the idea is we never want to put a quote out that's not real. Insurance is like mortgage, it changes. So our agents typically come in, refine the quote, make it cheaper. It's not that we give discounts, but what we'll always try and do is match your existing coverage right now. So what's your deductible? What are you covering? Do you have an umbrella policy? We say, okay, cool, John, you have all this coverage and you pay Y. We're going to give you the same exact coverage and it's going to be Z price. It's this much less, right? So it becomes very easy for the consumer. But yeah, you can email me, John at Turbo Insurance. Check out our website. If you do 2 closings a month, that's great, right? We've created a very seamless process where we want to use some digital integration for you. We'll do all the work, by the way, so you don't have to know any of that stuff. We can stand up a website for you pretty easily. We can stand up a landing page for you, or you can just, old school. Some of our best producers are just getting emails from their referral bases, and they're gotten the point where they're putting up 50, 60 insurance policies a month just from mortgage loan officer referrals.
Nice. Well, we all need better insurance partners out there. And so check out Turbo. A couple of things, just if you were to, let's say I was to back you out today and say, you're done with all this. I'm giving you your old 10B2 calculator, brokerage, and you have to.
I was looking for mine. It's actually on the sales floor because part of leading from the trenches is I like to be on the sales floor, not in my office. But yeah, I know that's the first thing I look for is that calculator. Yep. Oh yeah. Yeah, I got a bunch of those.
I probably have 20 of them, just in different places, all dead batteries. I now have it on my phone.
Yep.
So I have one on my phone, the exact same calculator, so I don't even need those things. But you were to start today, so knowing what you do, you were starting today, you had to open a brokerage, you needed to come up with a way to make 20 grand a month as quickly as possible. What would you do? Like, where would you start?
Well, first,
and you had limited funds too. Like you had 5, you couldn't go out and right? It'd be very easy to go out and buy
Sure.
$25,000 of LendingTree leads and make 25 grand.
Yep.
But you had $5,000 to spend. You were at Rocket 6 months ago. You decided to go work at Barrett or one of those companies you mentioned, right? It's a flat fee model. They're taking $875 a loan, and you got to feed your family. You're down to $5,000 in your bank account. And what do you do? Hey, I want to get a quick message to you here about adding value. And our industry is terrible at telling you, do this, do that. So many people want to add value to you, but value is not in what I give. It's what you receive and whether it makes sense for you or not. We've got a community, CEO1440, where we post every single day, lots of things, sales scripts, a whole plethora of things. So I don't know what particular things are going to add value to you. They probably all won't, but definitely some of them will. The community is free. Would love for you to get in there, sniff around, poke around, and maybe there's more stuff we can do. But I know it starts because if you're anything like me, you like to get in there, check things out on your own before you go and sign up for some large commitment. So get in there, check out our group. I bet that there's something in there and there's little things that you can do that had you known 6 months ago, you'd be making more money today. Join the group. Look forward to seeing you in there. Have a great day and enjoy the rest of the show.
First, I smile because I like to thrive when my back's against the wall. Like those are the best kind of scenarios. That's why I like startups and being an entrepreneur. But I would absolutely put my ego to the side and I would be all over social media, right? Meaning, even for me, I post every week and a half or so, but everybody's got to know what you do, right? Like I am a mortgage gal. I'm a mortgage guy. Okay, that's great. What else do you do? Do my aunts know? Am I reaching out to people? You know, the old Northwest Mutual trick. They say, okay, cool, you're hired. Go ahead and text 10 people and you got to go ahead and get, 2 leads from your sphere of influence, for example. Yeah, that stuff works. Right. And it's annoying and you feel like you're intruding on people, but it's as simple as the first thing I'm doing is I got to probably reach out to 150 to 200 people in my network and say, hey, here's where I'm at now. Here's what I do. Here's why I made the move to Barrett or Next or wherever the case, or C2, whatever it is. Right. Let me do a free mortgage review. That's something that Quicken used to term as free mortgage review. What else are you doing? Let me take a look. Here's what's going on in the market. And then the second thing I would do is I'm not just telling people I'm in mortgage. I want to try and be an expert online, right? So you got to provide value to people. And there's so much stuff out there. Hey, rates are down. Or I posted this video. You just got to consistently do it. And it's really weird. But if I had no money to do it, that's the first thing I'd do. The second thing is I'd go through my network. Do I have any lawyers, financial advisors, accountants? It's the same tricks, but nobody's actually willing to be uncomfortable and just put themselves out there and continuously ask the accountant for 6 months or 8 months or however long it's going to take in a row. Let me be your mortgage guy or mortgage girl. Just give me a shot, right? And all those different scenarios I'm trying to do is I'm just trying to get one lead and realizing that if I can get one lead and close it, that's got to become my referral source. And how do I create a referral tree of 4 more transactions from that one, right? You don't need a ton of money to scale. And you're most profitable and in my mind, the best loan officers today, it's not because they're spending a lot of money on marketing. It's because people look at them as the expert in what they do. And it's like, I got a guy, right? And if you're ever the guy or you're ever the girl on the other end of that, it's a layup deal. We get them all the time. Like, hey, John, Susie just closed a loan with you 2 months ago. She said to call you. That's a done deal. Susie's not shopping you. She's not going to go look for 4 people. You did a great job for somebody else who then becomes your referral source and your truth of source, right? Or your source of truth. So those would be the things I would do is getting out of my comfort zone and just trying to get one. And if I can get one, I know I can do it over and over and over in a repeatable process.
Yeah, that social proof, getting out there goes back to the thing that most of the world today is full of crap. And there's a lot of BS out there. If you can actually show people that I can deliver the result you want, price becomes far less important. Yeah, price still matters. Price will always matter in a mortgage, but I think most people don't make a decision based on price.
Correct.
So, any tech you'd use, anything like, do you think, how important?
If I'm a one, yeah, sorry, go ahead.
How important is your CRM? Those kind of things. How much time would you spend initially getting those things dialed in, or would you be really heavy on the sales side?
I'd spend a ton. No, I'd spend a ton. Like, so remember the equation is I just started. I got $5,000. I got to feed my family. I've got a 4 and a 6-year-old daughter and my wife at home and 2 huskies. So I got to make some money, right? So in my mind, I'm doing both of those things. But if I'm a one broker shop, tech, yeah, that's great. I probably need a CRM. Why? I need somebody to oh, I need something to automatically work for me when I'm not working on it. That's my drip campaign. I would spend a ton of time. Quite frankly, I'd probably ask the company, whoever the owner was of my company or the owner of the CRM company, hey, what's the best way to set up, or what have you seen that's worked from a drip campaign, right? Setting all those things up. Am I importing leads from somewhere else? Okay, all those people have to know. Anything of value on a CRM really only works, you get out what you put into it. So my first 3, 6, 9 weeks, I want to spend a lot of time dialing that in, because as your database grows, both with realtors or clients, you don't want to fill their inbox with junk, as you mentioned earlier. It's got to provide substance, right? Do you have a once a week video that's, hey, here's like Matt Ishbia always does 3 points every Wednesday. I think it was on Wednesday. Hey, 3 points with Matt Ishbia, right? So I knew every day at noon, I'm getting the 3 points from Matt Ishbia, 90 seconds long. It's the 3 things going on in the industry. I'd tune in. It became a thing, right? I just, I'm going to look for this on Wednesday. I'm going to see, okay, that's cool. Can you do something like that? You don't need to be Matt Ishbia to every week have 3 important things for a consumer or a realtor or a homeowner that you can bring value for, right? And if you consistently do it, you're going to get results from it.
Yeah, it's a lot of where the hole I fill is that they go there and there's not a lot of consistency or inside of those large companies, right? They're bringing you on. They're trying to provide a good back end to be able to close loans and provide a lot of optionality, but there's not a lot of training. There's not a lot of, what do I actually do, the blocking and tackling. So, or maybe they give you the how to do it. Here's a product matrix, but a product matrix and a closed loan, there's a massive difference between those two. So I think that's really interesting. And CRMs today with AI, it's crazy how much of that stuff is loaded in and comes in pre-canned, or you even just talk to it. You talk to your CRM. I'd like to do a campaign for clients coming from Facebook. I'd like to speak like a, whatever in an 8th grade tone and set up a series of 7 drips. And
I mean, my mom has an Android and she's telling me how she's using ChatGPT. And, to be fair, I don't really use ChatGPT as much as I should. I'm like, Mom, how the hell are you using this? Like, I feel like I'm behind now because I should be using it for everything. So it's so easy to get started in so many different things. I didn't even think of even saying, just go use ChatGPT to launch and input your CRM. I think that's absolutely the solution.
But if you are somebody that's out there that wants help with those kind of things, like you just want, I do free calls where I'll sit down with somebody, I'll spend 20 minutes, point out 2 or 3 things, point them in the right direction. We actually have a free group that I post every single day. So inside of like a closed community, that's super cool. That might even be something, right? Like worth doing with all of your insurance partners, creating some kind of group to where every lender that's out there, you've got a group where you post insights and you share back to all them some kind of tidbit or something. Because
100%. We our problem is, we have a lot of problems. Our main problem is we have so many leads. It's a buffet mentality, meaning I'm constantly fighting my producers on why we have to, we train on every Monday, we do a training. Tuesday, Thursday, we do hot seats on it. Wednesday, we do a group call review. And Friday, we do a certification. They're like, John, I don't need to do this. I'm like, well, we do, because I can't always guarantee a world where you have literally infinity leads right now. So all these things that we should be doing, like having a group, I mean, this is easy stuff we should be converting on. And we just have so many partners that are keep onboarding. We have partners right now of top 10 independent mortgage banks that want to launch with us. I'm like, I can't yet because I don't have enough agents. We have so much business. So we're in a unique spot right now in the insurance world where nobody's really trying to fill this void, which is great for us. But it means we, and mostly me, are missing the boat on some easy stuff like you just mentioned. Like what you're doing is infinitely valuable, and it's silly for me to say I don't have it, and then it's like almost embarrassing because it's such an easy thing we can do, and it is something that's needed. Like, why am I not getting any rating back in California for this insurance policy? Well, it's because the entire state's shut down right now for all these carriers, but we have this one regional we can use for you guys, right? Like that's the type of stuff where we can provide value, and I think it's a very good takeaway for me.
Do you use any AI on the front end of your sales process?
Weirdly, no. That's not true. So we built out a lead scoring model, but sales process wise, besides that, what we've done is said, okay, look, we know where all of our highest converting leads are going to be. We base that off of, loan size, zip code, state, age of the home, and it just spits it out because I got 12,000 leads for 30 agents. The math never maths. I can't work them all, right? So that part, yes, but the Department of Insurance, for the most part, is not a fan of AI. In our industry, we can't really have AI agents. I can't really have AI as part of my process yet. It's not even black and white. It's pretty much like just don't do it yet. So the insurance industry really hasn't changed from a tech standpoint since the 70s or 80s. It's very archaic. People say it about mortgage, it's more archaic than mortgage. So we do not do a ton of AI.
We should, again, not for here, but there probably are some AI bots. I've demoed a lot of companies and always that can probably, if you take the 12,000 leads, filter that down, not just a scoring model, but filter that down to make sure you call this 1,000 because they are going to be in an area that has 6 carriers and the likelihood of your conversion in Knoxville, Tennessee is far greater than, San Marco Island or whatever. The AI can look at just infinite amounts of data.
I'm happy to have that call because we have a hole there. And that's something that we would love to have some pointers on. I mean, that's extremely logical.
I will set something up. I just know people that do it really well. And I've seen them go into sales organizations where I was always the believer, like an AI bot can't outperform a good sales agent to get to, from hello to a 1003 filled out. And then I was like, oh shit, they're like way better. And it'll ask questions over 2 years and doesn't get bored. And it returns the phone call when it's supposed to. So it's like a little bit, it's a little bit different. Like my humans are best approach is like kind of like I'm fading by the side. But hey, this has been super cool. I appreciate your time. And again, if anybody wants to or has clients that need help with insurance, it sounds like they're pretty backed up, but they're still taking business. And JJ's there, ready to help. I think it's awesome to see what you did. I think there's a lot of people out there, right? There's always haters. Yeah, people want to hate on the guy that goes out and does it as a trailblazer. It's only because, they're just upset that it wasn't them. Very few, sure Tony Robbins isn't hating on you. So it's always people throwing punches up, but I always think it's interesting when, I'm a big fan of seeing people that worked at, Rocket Quick and whatever, getting out there and doing and accomplishing things because we all kind of come from the same background and it's just cool. Yeah. Any parting words for anyone that's out there, maybe struggling, plugging along in the mortgage space that you would have for them?
You got to keep fighting. Yeah, my parting words are this. So my old signature line in my email was a picture of Forrest Gump holding up a bunch of crabs. And if you remember the movie, and I used to tell my sales folks, my loan officers this time and time and time again when the market was tough in 22 and 23. It was very simple. Like, look, in that movie, Forrest Gump and Lieutenant Dan didn't catch any shrimp. They go out and try and catch shrimp. Nothing. Big storm comes. What happens? All the other shrimp boats sink. And the next part in the movie, they're on the cover of Forbes magazine, right? Like you are in the spot right now where it's a storm and people are washing out left and right. They can't make it. If you can just make it, there will be light at the end of the tunnel. And what I think is going to happen is we're going to see a longer refi. I don't want to say boom. And it's not just about refi. If rates come down, it's going to open up purchase and all these other things because people are rate locked XYZ. But I think we'll see a sustained 4 to 6 year run because rates aren't going to drop as fast, but they might be a slower drop for longer, which is going to be a longer angle or a longer boom time for all of us. So if you're still in it, just remember that movie Forrest Gump. It's good to go back to your roots. You just got to keep fighting and you stack up wins. It doesn't have to be closings. It can just literally be, I had a great conversation. I got a new referral partner or, something, right? Just stay positive if you can. And every day that you wake up is one day closer to when rates come down and you're in a much better spot.
I think that's fantastic advice. The goal is to stay in the game, right? You don't win at fitness. Like I don't become fit. I don't win at marriage, right? I have to stay married. I have to stay fit. And I think mortgage is much the same. You have to stay in the game and constantly become a better version of yourself and leverage those people around you. So this has been super awesome. I appreciate it. We'll get some links for, where you can find JJ. You most active on LinkedIn? Is that where somebody would find you?
Yeah, I don't do any other social media. I'm just a LinkedIn guy. Yep.
Perfect. Us old dudes, you're younger than me, but for us old dudes, we like LinkedIn. So I appreciate this. Anybody else questions about mortgage, scaling your company, we've got a free group that you can get in. It'll be someplace down here, but you can go check that out. And I look forward to working with anyone out there, helping you get your poop in a group. So I appreciate it. Thank you, JJ.
Thanks, John. Appreciate you guys. Have a great day.